right.
Okay, welcome to the second installment of the Daily Web. And we state that to understand the market, you have to take account of all the feedback loops of economics, psychology, business, politics, ecology, statistics, gambling, with particular reference to duplicity. What evil lies in the market performance every day? Today was quite an adventure. In fact, it's always an adventure in the market, and there are always a million lessons to learn, and always a million mistakes to make, and always a million things to highlight. How did you do today? What did you think the major duplicities and adventures in the market were today? I certainly found it a very exciting and harrowing day, but I find every day exciting and harrowing in this fake poem.
Well, as usual, I was short going into today, not as usual, but second day in a row, and covered early.
Congratulations.
Thanks.
Well, let me interrupt for 1 second. Never try to make money the same way 2 days in a row. So be very careful if you do that on Monday. Go on, continue.
No, I'm not. I'm flat on Monday and should have been long, but I was just out running errands, so I just couldn't be here for the close.
Oh, that's a tragedy.
Yes. Are you long coming in to Monday?
Well, I try to follow the market 24 hours a day, but as you reach the century mark, it's very hard to stay up 24 hours a day. I used to be able to do it with impunity. Unfortunately, when I had a big match in my racket career, I stayed up late because I was nervous and tense, but now I try to follow every aspect of the market, and there was a tremendous move at during the morning. There were two huge declines,
right?
And it stayed at those declines until the open. So then the question was whether it was going to recapitulate yesterday. And the market never recapitulates. In fact, if anything, the best thing to do is to stand on your head and assume that the opposite will occur.
Well, when you said market capitulate, based on what marker or based on what principle are you saying that?
Okay, well, the principle I'm talking about is every movement the move from the open to the first 5 minutes, the move from the first 5 minutes to 10 o'clock. Yesterday there was some tremendous moves during those periods. Of course, I have every minute marked with prices of 15 markets for the last 30 years. Today there was a tremendous rise. Well, starting with last night, there was a drop of 15 points from 3 to 330. And then there was another drop from 5:30 to 6:30 a.m.
Yep.
And it left the market at the open down 20 points on the day. That was very scary. Now, the previous Thursday, it had started down 10 points on the day. Then in the first 2 minutes, it went down another 10 points. And then in the next 5 minutes, it went up 30 points. Now, you might say, well, those are very trivial moves, but actually, the moves in one day are probably greater than the whole move in a year. So that if you catch the big moves in one day, as you probably know from your day trading, you can catch a whole year's movements. But why did the market open up so far down, in your opinion?
Well, it had to do with Brexit, right? Their negotiations are breaking down, and the deadline is near, so the markets are panicking. Although I personally don't understand why, because the Brexit saga has been going on for how many years right now, and why does anybody still care?
Well, there's a deadline coming up as of the end of December as to the time that that England has to
Right, to
make its exit plan.
Right.
But I think there's a general principle. Not only did Brexit break down, but the stimulus seemed to break down because McConnell said that he didn't see a likelihood of it going forward. And that brings up a general principle. The principle is that the market loves the world state. They love collectivism, and anything that happens to reduce the chances of collectivism and a complete meshing of the interests of everyone with of every country, a uniformity in every country, with a very small cadre determining what they should be. I noticed that in Brexit, if England were to leave, that would lead to the breakdown of 1,934 international agreements that they have agreed to with Brexit. And of course, looming on the horizon is another nuclear deal with the Iran. And to me, one of the keys to the market drop was the Hunter Biden news.
You mean yesterday's?
Well, it was ongoing. The Post had again 5 full pages of Hunter Biden news, a big headline on the front page. And as we said yesterday, a key to the news was that it wasn't released by the Republicans. It apparently was released
by the Democrats, right?
And why was it released by them? It's another step in the Kamala Harris presidency.
Well, it's also allegedly that collectivists, as you call them, or progressives, they want Biden to put more of their people into the cabinet, which he hasn't done so far. So maybe by putting the Hunter Biden news, they're kind of pressuring him into putting his key people into cabinets more.
Now, you were in Russia for a long time. Did things like this happen in your country?
When I was growing up in Russia, there's only one newspaper, Pravda, which kind of reminds me of CNN these days. The major difference being that in Russia, everybody knew that Pravda newspaper, which literally means truth in Russian, was never truth. But here, the media, while having the same reputation as the Russian Soviet Union newspapers, people believe the media, which I find quite interesting and ironic.
To me, I saw in the market what I like to say is ontogeny recapitulating phylogeny. the market basically, as of the open, recapitulated the previous day.
Right.
And then by the end of the day, it looked like nothing happened. It was almost exactly unchanged. The NASDAQ was down 1/10%. The S&P ended up down
A couple points.
2.2%. And yet there were quite a few divergences. The Japanese and the German markets were down about 1%, and they started down 2.5%. And to me, that was very negative. I don't like to see the US market acting much better than all the other markets. And in fact, if you test that, you'll find that it's quite a negative indication. I noticed that the Wall Street Journal had a big article patting themselves on the back for the fact that they covered the Hunter Biden story, but that no other paper did aside from the New York Post. However, I subscribe to the Wall Street Journal, and I noticed that the news department kept all news about Hunter Biden off the newspaper until after the election.
Right.
And it was only the editorial department that had the merest trifles on the story. I think that as you said, all the news about Hunter Biden makes the Harris presidency much more likely. We'll have to look at what the betting odds, how the betting odds on her presidency changed. Yesterday they were 1 in 5 for 2024, and we'll see if they improved. I would suggest they did. Anyway, the market was reacting to that. What else did the market have in its sights today?
Well, I don't think the market liked that New York City is closing their indoor dining again. It's still more COVID news, which I don't think the market liked that much. But then the vaccine news came positive, so that kind of helped.
Well, I agree with you that the closing of the New York dining establishments is a big market mover, and I'll go further. The news that Kyrie Irving won't talk to the press. He's very big in New York because, as you know, he just joined the Nets, and he's one of the staunchest advocates of the Lives Matter movement. And he's the sports teams are beginning to realize that their idealization and appreciation of all the Black lives and they're featuring it in all their.
Well, it doesn't bode well for their ratings, if that's what you mean.
I say it doesn't bode well for the market. There has to be another way of adjusting to the pandemic besides closing down all the businesses, hurting all the employees, and you ruining the livelihood of so many business owners who have worked so hard and are the source of so much.
Right. So to that point that you were saying, that I mean, pretty much a large piece of U.S. economy has been shut down for over half a year. So does that concern you at all as far as the markets go, as far as the company's profits, valuations? Or is
Well,
that,
it leads to the question that we discussed yesterday. Why do all the big techs love the progressives?
right?
And in a sense, they love them because the competition from independent entrepreneurs and small businesses
Has
is
been
reduced.
Right.
Everything that big government does tends to help the big businesses. They haven't been closed down, and it hurts the small businesses.
Right, but even Russell index is more than doubled since the lows in March. And it really represents not large businesses. Is that a concern then?
I think it's a positive, because a positive for the market, because as I say, they love collectivism, and
Right.
and there was a big move to collect. But now, somehow, by the end of the day, the market was back to normal. What do you feel that augurs for the next few days?
Well, you tested, but the next week, according to, for example, quantifiable edges, the next week is the option expiration week, and option expiration week in December is very bullish, 70% bullish, if I recall the data correctly. And except for last year, it wasn't so good, but since 84, he has tested it since 84, I think. And for some reason, my link is not working right now, but it's 70% probability of the next week closing positive.
That would also be the last week of the year, right? It would be in relation to the Christmas holidays and the New Year's to, what's the options
Right,
expiration?
it's an option expiration week, and I guess the last week of the year, a full trading week, yes. So it's bullish on many accounts, I guess. Do you agree?
Yes, I agree. The press is in ecstasy because they can point out that the market has gone down 3 days in a row. However, those 3 days have left the market only 0.3% below its all-time high. So I would be looking to see what the market does on when it's gone 3 days from an all-time high. And I notice that that's very bullish. As to what it will do Monday, I would say that its move on prior Monday. It's gone up on the prior Mondays about 5 times in a row. Last Monday it was up 1%. The previous Monday was unchanged. The prior Monday was up 1%. Prior Monday was up 1%. I don't like the recurring tendency of the market to be stronger on Monday. So
What do you mean you don't like it? In what sense?
well, one of the principles that a person should follow is the principle of ever-changing cycles. And if it was easy to make money the same way, then everybody would be very wealthy. Now, Robert Bacon, in his classic book, The Secrets of Professional Turf Handicapping, pointed out that the cycles change about 3 times in every race meeting. Originally, the horses that are shipped from one course to the other haven't adjusted to the courses, then so it's bad to bet on them. Then they get used to the course, and so in the middle of the season, it's good to bet on them. But then by the end of the season, they're tired again because they've been racing for two courses in a row. So the same is true in the market, that if there's a way of making easy money, then
right. Market has been gapping up pretty much almost every Monday for the last couple of weeks, months.
Of course, that brings us back to the other point. The market has been going up 600% almost every year.
Right.
It's up. Remember, a dollar would grow to 60,000 in a century. I always tell my kids, the best thing to do is buy and hold. Stick to buying and holding. That was the mantra of Jim Laurie, who founded the Merrill Lynch University of Chicago studies of the market performance every day. He was a very successful investor.
But when you say buy and hold, you mean an index, for example, S&P 500, right? Not individual stocks or?
Well, I think it goes further than that. All my kids, many of whom don't appreciate the virtues of capitalism, have fortunately had it drummed into them that they should stick to 100% investment in stocks. And they're invested mainly in spiders and in the Vanguard funds. And that's very good. However, when you see a day like today that had about 10 moves of 0.5% to 1%, that encompass maybe moves of total of 8% on the day, and which is the average move, the average that a stock market goes up. There's no way that the ordinary person can get it. There were so many cross currents. There were so many terrible, misleading, duplicit actions that occurred during the day.
Right. Absolutely. But do you still think there is an
stick
average?
to buy and hold. Stick to buy and hold. That's what the average investor should do.
But should the average investor ever sell? Not sell short, just not always be 100% invested. Like, for example, right now, you could argue that the valuation is stretched. For example, go ahead.
I've received that suggestion from almost every partner I've ever had. And the problem with selling and arrogating the idea of buy and hold is that you never know when to get back. So that a lot of people sell, and when they think they have an edge, that the market looks too terrible, that the news is very bad. But then eventually, by the time they get back, it's 10% higher. So that's the problem. Now you mentioned that there was some big money made on the public offerings today.
Right. It's basically back to my question on valuations. I think that IPO market is extremely hot. For example, Airbnb was priced at 68 and was trading as high as 165. So DoorDash was priced at 102, was trading as high as 195. I mean, Airbnb market cap is $100 billion, roughly. That's 25 times revenue. And now during pandemic, Airbnb is not even working full steam. So they're trading at insane valuations. Airbnb it's trading at 2 times Marriott hotels. Tesla is trading at 18 times Ford. DoorDash, same thing. So there's a whole bunch of tech companies, while they're benefiting from this coronavirus shutdown, they're still insanely valued. And so my question is, they're right now a very big part of the index. Tesla is going to be included into S&P 500 next week or so. And if the valuation is too stretched, they all could go down significantly, thus dragging the index. They're so richly valued right now. So I really cannot see how S&P 500 can go so much higher without some significant pullback caused by these stocks. The number of companies that IPO'd this year and that have doubled in one day is 19, according to some person on Twitter that I haven't double checked. 19 companies have doubled their valuations within a year after the IPO. This in the last 10 years, this has never happened. Only if 5 companies do this, now 20. So the IPO is insanely hot. The valuations of the technology companies are overstretched. So that's my question. Do you think an average investor needs to at least lighten up some of their long positions?
Well, Ms. Sennett, regrettably, in each of the last 100 years, there has been a scare, a terrible feature of the stock market that would lead one to become very bearish, that would lead one to think that there's no future that's positive, that the P's are too high. But yet, during that period, the market has gone up 60,000-fold. Now, the anecdotes and the incidents that you remark are typical of every year. There's nothing, the P's may be higher, but relative to the interest rates, they're not higher. In fact, even Schiller, who won the Nobel Prize, who's usually completely wrong about the market, was bearish for about 50 years. Even he has acknowledged that the value of earnings when the interest rates are 1%, in terms of an annuity is 4 times higher than when the interest rates are 4%. So everything that you say is counterbalanced by the fact that interest rates are so low. And I don't agree with you that any of the companies that you mentioned are valued too highly. In fact, my daughter, who happens to be the tech who's helping set our meetings up, has been buying the stocks that have the most glamour. And she has about 15 stocks in her portfolio. It's an average holding of 2 to 3 years. As you know, none of my family is encouraged to ever do anything but buy and hold. And every one of her stocks is up 5-fold. And the studies show, Dimson's studies show that the stocks that go up the most in any 11-month, any 6-month period are the ones that do the best in the next period. And the stocks that do the best in 1 year are the stocks that go up the most, that do the best in the next year. So I don't agree that the fact that these stocks have gone up so much means that they're very bearish. But I would point out to one thing. The average investor can't get any of these IPOs. The
Right.
IPOs go to the very good customers of the big brokerage houses that charge excessive commissions of maybe, instead of paying nothing when you buy a stock, you may be paying 5 times as much. And a guy who runs a mutual fund that has 500 million in asset value says he can't even get any allocation of these IPOs. So it's not a one-way street. In order to
Right.
participate in the IPOs, you have to make a contribution to the market overhead.
Right. But if I point out back in time in 2000, when we had the last technology bubble, Amazon, for example, was trading at a high of $115 and at a low in about 2 years, $5. So it was still a growing company. Nothing has changed, but it went from 115 to 5. So I'm not saying this is what's going to happen this time to Amazon.
Would you be better off if you sold the Googles and the Amazon?
But of course not.
PayPals of those days? No, you can never know.
But we all know human psychology, and the vast majority of people wouldn't be able to hold Amazon from 115 down to 5 and keep holding it. Most people would sell, I don't even know, at half price or whatever, they would sell it. Most people are not going to be able to hold Amazon back to 5 and then for 2 years. That's what I'm saying. So my concern is that may happen to the high value technology company right now as well.
You prove my point. That's exactly why you should buy, hold, and do it on a proper,
but maybe not buy it.
Proper money management.
Yes.
You should never have a leverage. I think studies have shown that if you leverage 2 times your investment, in other words, if you have $1 million or 100,000 to invest, you should buy $200,000 worth of stocks. And instead of making 60,000 fold a century, you'd make 120,000 fold a century, and you'd never be wiped out. If you go to more than 2 times leverage, there's always a danger that one of these horrible, what they call corrections, would lead you to be wiped out, and then you have to worry about margin calls also. But 2 times leverage is a good rule of thumb for the average investor to follow.
That was very interesting.
Yesterday, what do you think about the science, the world of science today?
The world of
the science. I noticed that Dr. Fauci is going to be the lead scientist for Joe Biden's team. Now, as you know, there's a letter from him to Hillary Clinton's
right.
Chief operative, saying that he loves Hillary and the fact that she was able to have I would say that every comment that he made in the last year has been something that will tend to sink the president.
Well, I have a question. Why do you think Trump didn't fire more people, and why didn't he, during his 4 years in office, didn't put more loyal people in? Why is Dr. Fauci Attorney General, and others are the ones who constantly undermine him. Is that something he just couldn't do for whatever reason? Or?
Did that happen in your country? Are there certain operatives that Putin
Sure.
didn't that he lived with, and that he didn't have close relations with, that were even against him? No,
right, but I mean, we live in a democracy, not in a dictatorship. It's a democracy, and Trump allegedly is a dictator, yet he couldn't dictate anything, it seems.
He would have received so much bad press coverage, and it would have been so much of the deep swamp that would rise against him, that he didn't dare to fire a supposedly neutral scientist like Dr. Fauci. So he didn't dare to fire. He fired so many people, and every time he did it, he was upbraided and humiliated. There was a tremendous outcry against him.
Right, but on the other hand, he gets bad press every day. So what's another bad article? It doesn't matter at this point. But for example, his current attorney general obviously knew about the Hunter Biden investigation and did nothing before the election to announce, confirm anything. So Trump appointed him, and I just don't understand why Trump would appoint people who constantly undermine him. Not even just firing people who have been there for a while, but physically actually appointing people, new people on the post who constantly undermine him, whether it's Tillerson or the current attorney general or a multitude of other people he actually appointed who don't support him.
Well, you bring up a very important point that leads to a general principle. And Thomas Jefferson was the first person to say that. It's not that bad people go into politics. It's that once they become politicians, the evilness of the game forces them into destructive acts. So once Barr seems to be a man of great integrity, but he was led by an ineluctable, invisible force to become a spokesperson and a chameleon that helped the Democrats along, and he was able to follow the principle well. The Justice Department shouldn't interfere in an election. Well, of course.
By not interfering, you are interfering.
But he caught the endemic. It's contagious when you have 98% of all your colleagues working to sink the boss. It's hard to go against them. Same way the Wall Street Journal editorial page was forced to keep the Hunter Biden material very quiet, and every other newspaper was, so that the tendency for collectivism is contagious.
Right. So how do you seem to be an eternal optimist?
Yes.
How do you reconcile your optimism with your view that collectivists are pretty much in charge right now and for a foreseeable future, potentially, given now that they could potentially rig elections or not, and at least demoralize people from voting? And so if collectivists come to power, like Kamala Biden, this is obviously not good for a long-term future of America. So how do you stay optimistic in that light?
Well, as they say, the only hope is that things will become so bad in 2 years that the progressives and the collectivists will be thrown out of office, and that the Congress will become, the House of Representatives will lean towards the Republicans, and the Senate will stay with a Republican majority. But I'm not convinced that the move to progressivism is bad for the market. It's good for the big techs. It's bad for the independent.
But to a certain point, right? I mean, after a while, if America turns into, I don't know, Soviet Union style, it's not.
I don't know if that would be bearish. Didn't you say that the Russian market was up?
Oh, I don't know if there was a Russian market at the time of the Soviet Union. Now it's different Russia, but back then I don't think there was a stock market.
No, but how has it been acting lately?
Oh, lately, actually, I haven't looked, to tell you the truth. I have to check.
The Chinese market's been going very well.
Yeah, it's been doing very good.
Yeah.
Lately. Yeah.
What else do you see today?
Yeah, I think that's pretty much it for today. I think
we covered a lot of subjects.
We have. We should probably wrap it up. It's been about 45 minutes as last time, which we seem to try to keep it under 15, but 3 times that.
Well, what were the highlights of today to you? I mean, did you learn anything?
Yeah, you mean from our conversation? Yeah, that the best thing for most people is to buy and hold. That's
a lot of the market decline today was caused by the negative publicity on all the progressives. The Hunter Biden story.
Interesting, right?
The breakdown of all the stimulus and the Brexit. The fact that those broke down instead of what you might think that they would be bad for the market. They are actually good for the market. I think one of the principles is in the market that we've discussed is that things are never what they seem. There's always another story that enables the big traders, the big institutions to profit at the expense of the little guy. And there was a perfect example of that with every seeming move, every big swoon in the market, including the one that occurred at 3:30, 8:30, and at 1 p.m. What looked like bad news turned out to be the absolute time to buy. Okay, until the next meeting on the weekend, I'm sure we'll bring a tremendous number of instances where the public will be induced to do the wrong thing. The market will show its duplicity, and you got to be on your toes to stay afloat. Thank you very much.
Thank you. Also, was it your birthday yesterday?
Yes, I was 110 years old.
Congratulations. I forgot yesterday. So happy birthday and all the best wishes and health, the most important thing. May you live another 100.
I'll be lucky if I live another year. Thank you very much.
Thank you. Bye-bye.
Bye.